The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And we started the, I'm getting an echo, Al. How does this happen? This is not good. I'll just keep talking and listening to myself at the same time, I guess. Okay, I started the show today with the VIX index. Basil Chapman was talking about it before we came on the air. And what I'm thinking here is that he said the 1282 in the VIX index was going to be very significant if we close above that point. As you can see, we went above the I just figured out the problem. You know, when you try to teach an Italian how to walk and chew gum at the same time, it is really difficult, especially one that doesn't have any teeth. So it's real interesting here. We're able to do this now. So I didn't have my sound muted, so it made it a little difficult to see this. But anyway, if the VIX index closes anywhere near 13, in my opinion, we took out last week's high. We had that cycle low come in, that 10-day cycle low that we looked at on Thursday. And so far, you know, the market has responded to what we wanted to see. Now, today's lows were exactly at the 786 retracement of the lows we made back on the 26th of June, back about 3 weeks ago. So that tells us that that's really strong support at 786 level at 1943. That was the level that I mentioned in the S&P, that if we go below that level, that's going to set up a much lower prices on the downside, in my opinion. So what we're watching here is if the market can hold this. Now, we made a Gartley last night. I posted that into the Tiger TV to let the folks see it. It was a perfect Gartley last night when the market got up to the 1968 level. It was just absolutely spot on, 61% off of the high from the low yesterday. Basically what that means is that was a 2-day rally. We came down and made the ABCD move down here today at 1945. So far we've had a 382 retracement of the high that we made back on July 3rd, whether that's going to be taken out or not. All I feel very strongly about is if we go below 1943, something really dramatic has happened, folks. There's been a change in the continuity of thought. And there's some things here that lead me to believe that something is really wrong out here, and it's finally coming to somebody's attention, and we might get something really significant. I don't know if this is the top. All I know is that it's a top. I feel pretty strongly that it's the top, and I'll go through some of these as we go through. So we looked at the E-mini, and today's low was a perfect Gartley down at the 1945 level to the exact tick, and that tells us that this market looks like it could easily have a rally from here, which we've had. We've rallied almost 100 points in the Dow, and we've rallied over 12 points in the S&P in the matter of the last 2.5 hours. Now, if we take a look at the Dow Jones E-mini, we had the same thing happen last night. We rallied exactly to the 61% retracement up at the 16,920 level, and then we broke another 250 points down from that level, 280 points down from that level to put us down at the excuse me, 200 points, not 280, 200 points down to the 67.20 level. And the level that we're looking at here is below 16,700 in the Dow E-mini futures. That's a little different than the Dow Jones. The Dow Jones comes in at 16,800. That's the one that we want to be watching mostly from what we're seeing when we're looking at these. Now, if we take a look at the NASDAQ, we had the same situation. Now, the NASDAQ is the stock market on steroids, so you have to remember that it's been much stronger here in the NASDAQ. So we've had a perfect 61% retracement last night, and it stopped exactly within 1 point at 3,891. And the high was 3,992, so it was within 1 point. It went 1 point higher than the 61% retracement. On the way back, we've retraced 61% of the yesterday's early morning highs. We've gone up to that level, and so we're setting at a real critical level here in stocks as we start the show here today with the Dow down about 96. But we've got some things that are in the mix here that make it look like it's going to be very interesting next few weeks. The commodity markets. This is the commodity show, and I wanted to show the stocks because I think we hit such critical levels last night, and the fact that we hit them again today is very, very important for what we're looking at. Now, we also have been talking about the dollar versus the yen, and I wanted to put that up here to take a look at it because we've now broken down below the 786 for the first time in a long time. That's been all the way back in May when we finally did it. And it says to us that this is going to continue, going down into below the par level. It looks like. So if we get below par and get somewhere around 95 in this dollar yen, then that's where we'd really want to be looking at it. If you folks remember, Tom O'Brien was incredibly bullish. This was when it was 75, and it went to 105. So just a nice normal correction. The 382 correction comes in at par at 100, and we've hit that 2 or 3 times here over the last 13 weeks. And if we go below par, which is 100, we're 120 pips from that point right now. That will tell us that we're going to be heading down a little bit lower. We've had lower tops all along here since April, so the trend by looking at lower tops and lower bottoms tells us that we are looks like we're heading to the downside in the yen-dollar relationship here. And on a longer-term basis, remember the yen used to trade at 360. It went to 75. So we're still in the very, very low end of that range. So there's a lot of give and go with this to see if it's going to have some tremendous moves. It trades technically as well as anything that I've seen in all the years that I've been doing this. It's one of the top 3 in my opinion, with the euro being number 1. And I would think that the British pound is probably number 2, and number 3, I think, is the Japanese yen. Now, some of the cross rates are good, like euro yen and yen pound and things like that. But I basically look at everything versus the U.S. dollar. It's easier for me to trade. I don't have to worry about all the crosses, and I only follow about 18 things, and that's enough for me to, to keep me really, really busy. Now, what I think is happening here, it might take time, go through the first part of this, and we'll get into the commodities in the other part of the show. I wanted to talk about bonds for just a second, because this market bonds and notes is so much larger than the stock market, folks. It's many, many times bigger than the stock market. And for the first time in a long time, this started about 5 or 6 days ago. We started to see that the junk bonds, i.e. the high-yield bonds, has begun to lose really rapidly to the price of the 30-year treasuries. The 30-year treasury yields are going down, and the junk bond yields are going up. That hasn't happened in a very long time, and I think that's the beginning of what I believe to perceive is a liquidity crisis, where it's going to be hard to get credit. Right now you can get credit if you have a heartbeat, and even that's optional. So we'll see if this continues like this. The Federal Reserve is always jawboning what's going to happen, but frankly, folks, when markets are ready to move, the Federal Reserve can only do certain amounts of things. The natural course of events will take it where it's going. Now, if they've made a big all-in bet here and have done something wrong because of this is an experiment, we all know that. They've told us that several times. But if this experiment should fail, God help us all, because it's going to be it's going to be very, very bad. And the problem is, what's going to happen is cash will turn to be king, and you won't be able to get credit. I mean, it'll be really difficult, almost like it was in 2008 when the market was, collapsing to the downside. Mortgages were drying up and all that stuff. So if this $4 trillion comes home to roost, we're going to be, to see what's going to happen. I know personally because my daughter just bought a house in California, and she put 50% down on the house. Well, no, she put more than She put 70% down on the house, and she still had a difficult time getting the mortgage. It took an extra 2 months to get it, and she's self-employed, being a doctor, but here she's got a great income, and puts that much money down, and still could not get a quick approval, which I thought it would happen in a couple of weeks. It took several months. So it's interesting what's going on out there. My wife Sarah, of course, loves real estate very much. That's her second favorite passion other than trading the euro, and she's had her eye on a couple of pieces of property up in Scottsdale, Arizona, and they've been for sale for almost 9 months now, that was really amazing. Yeah, my daughter's in California. She's in San Luis Obispo, California, which is probably one of the most, if not the most beautiful place in the world. I used to live there, and it was just one of the most spectacular things. Anyway, we have to watch these junk bonds because we are really starting to lose here, and that tells us, where we're going to be. Now, I'm going to start the next part of the show here. I might not be able to finish it by the end of the half hour, but I think it's important enough to really look at, because this really explains what's happening in the debt markets, in my opinion, and I think it's important that we look here. And we'll start out with the notes because that's the biggest market. This is the one that determines whether we have interest rates on our cars and on our the credit cards, and also the mortgages. All that is determined on this. And as you can see here on the long-term place, right here, you'll notice that these Treasury notes have been in a long-term bear market since it made the butterfly back in 2012. We came down to the 786 of the 2011 low. We haven't gone anywhere. When you stop and think how much money that the Fed has put into this, it is really quite amazing. So I have to tell it. Well, it looks like we're going to take a break. Maybe I can tell the story before the break comes. Oops, can't do it. Doggone it. It was a good story, too. All right, we got the Dow down 91.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I do want to relay this story because it was life-changing for our family. Next to San Luis Obispo, California, is a little town called Morro Bay. It sits right on the Pacific Ocean. It's a little fishing village. It's really a beautiful place to live, except that it's fogged in all the time. My good friend Jim Twentyman lives there, and also who lives there was a man named Jack LaLanne. He used to have, he was the original physical fitness guru during the 50s and 60s and 70s, and Jack moved there in about 1983. I met him in 84, I believe, and we became friends. He was really big into fishing, and I didn't like the fishing, but when the guys came back from catching salmon, I was always making pasta or cooking steaks or something, so we became friends. On 4th of July, my daughter was with me, and the one that was getting ready to go to school, and she recognized Jack LaLanne, and she went over to sit and say hello to him, and he stayed with her for 3.5 hours talking to her about the positive parts of living and what it was like, you know, to think positive. He just literally gave her a course in this. It changed her life forever. She's never forgotten it, nor have I. And he was just really a wonderful fellow. He lived way into his 90s. He passed away just recently, I believe. And his wife, Lala, I think passed away just shortly after that. But anyway, we want to get into this here to talk about the what's going on here with the interest rate market, because I really believe that we're at a point where we could easily get to a spot where credit is going to be really difficult. So the chart that I posted in here is the 240-minute chart, which is a 4-hour chart. It allows you to see the daily chart a little better, and it shows that the this Treasury note is completing a Gartley pattern. It has two ABCD patterns here over the past 2 months up at this 125.15 level. That equates to just about 138 in the bonds, and we got to 137.23 today. So I believe that we're at a real critical level here now that is going to be very, very interesting to see how the markets hold this, because we could get into a point where it's going to get very, very difficult. It is going to be different this time, folks. I just don't know the extent of how different it's actually going to be, because it is so just tremendous. The fact that we're getting this good volatility here right near what we think is a high level is very, very important from our standpoint of looking at it on a technical basis. That's what I think is the most important of the things that we're looking at this particular time. I want to show you the Treasury bonds here, because we have the same type of pattern in Treasury bonds. It is also completing a big ABCD, and it's up almost near the 786 retracement in the Treasury bonds, and so we're at a really good level here. We've been up for 6 days now in the bonds, so we are definitely overbought. And the $64 question is do they stop here, or do they continue and go? Now, folks, if the bonds get above 140. There is a slight chance that on some type of a flight to quality or something that they could get all the way up to the, maybe even 150. And when you stop and think that the Federal Reserve, what they did is when they issued these Federal Reserve notes to put money into the system, that's what they did. It's not a U.S. dollar. It's a Federal Reserve note. And when they put those into the system to buy, what they did was they bought Treasury bonds. So their big asset allocation is in Treasury bonds. So what other way can they get out of this mess other than bonds to go up? How they get them to go up, I don't know, because for every buyer there has to be a seller. And technically it looks to me like we're very overbought. And it could be at the point that the bonds that they bought are going to go down in value, and then they would be in even more difficult situation, than they already are. So we have to watch that situation closely. It's very similar to where we were in early June. I want to put this chart in to let you folks see it, because it was at that time we were making a really nice 3-drive to a top pattern in the Treasury bonds right up at the 139 level. And it was just spot on, perfect symmetry where the AB leg was perfect to the CD leg, and the time between May 2nd and May 15th was equal to the time between May 15th and the 28th of May when it finished its high at that level. So we're at critical levels here in bonds today, along with the other things. We got the Dow up. Down 74.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we've posted a chart into Tiger TV that shows the weekly corn chart going back well over 2 years. And you can see that we've gone from $6.15 a bushel down to $3.91 a bushel. And we have a very large AB equals CD pattern completing down around $3.40 a bushel. It's been a long time since corn has been at $3.40 a bushel, folks. This is a very, very cheap price for the rest of the world when you stop and think where it's been and where it is right now. If you'll notice on this chart, that last week we had a a very bearish crop report, and that's what caused the market to have this gap that you see on the chart here. And basically what they were doing is they're planting as much corn and soybeans and wheat as they possibly can, and which is good because the food will definitely be needed worldwide, even at a cheaper price. It doesn't help the farmers, but it helps the people that need to eat. And so the main thing to watch here is that the next level here in the corn could be down at the $3.40 for bushel level without any trouble at all. It could make that level. It is just really at a spot where it could really go quite a bit lower. Now on yesterday's show we were talking about looking at wheat down around this $5.40 per bushel level, because on the long-term weekly chart wheat is making a 786 retracement. The daily chart that I've just posted shows how it held at the 618 for just barely 6 or 7 days, and then it started its descent to the downside, and it makes it very difficult to build a case for bullish wheat when you see these markets going into new low ground all the time. And so that's the main thing that we want to be watching. But if we take a look at the long-term weekly chart in the in wheat, and wheat is golden, by the way, but it's just not gold. As you can see, we're going to be right at the 786 retracement here, and that'll be an interesting spot. We're below it right now. We've taken it out by a few cents. We've taken out last year's low that occurred at 551 a bushel. We've taken that out. Now, whether we reverse here or not, I don't know. We've been down for 10 weeks in a row, folks. So it could very easily have a short covering rally in here without any trouble at all. But there's no sign of that coming right now because the market continues to make new lows on a daily basis. There's very little there to build a case for a sustained rally in wheat or corn. And so the next one we need to look at, being in the commodity hour here, is the price of soybeans. And this is interesting because I think we're going to be seeing the same type of pattern that we're seeing here in the soybeans. We'll see this in the stock market because we just completed this 1, 2, 3, 4, 5 expanding triangle that topped beans in May of last year. Then we had a pretty significant break of about 70 cents or $3,500 a bushel. Then we had a really nice rally almost exactly to the 61% retracement at 1248. And since that time, the market in the last 10 days has given up $10,000, almost $2 a bushel. And remember, soybeans used to trade in a range of $4 to $5 for a very long time, so we could easily go back to that level. That would cut beans in half from where they are right now, which would be pretty detrimental to the farmer, but technically, they certainly could. If demand dries up and the crop is super like they think it's going to be, who knows where these things can go, because they've done this before. We've seen it happen in crude oil where it went from $30 to $140 and then back to $30. Well, these grains can do pretty much the same thing. So you have to be really careful and understand what the futures markets, how they operate. That's one of the reasons why we have our good friend Rich Anderson coming on the phone, coming on the show all the time, is because Rich is able to see, what's really happening. Now, if we took a long-term chart on soybeans, you'll see that we made a head and shoulders pattern in this over the last 4 trading years, and we've been from 1330 bushel down to the new lows that we're looking at now, and the measured move on this low that we're looking at for soybean takes them under $9 a bushel, and we're trading at almost $11 a bushel now, so they could have another $10,000 to go on the downside. And soybeans is one of the few products in the world that has an inelastic demand. Basically, that means that they're going to use soybeans at the quantity that they need to use, regardless of what the price is. The demand is inelastic. It doesn't make any difference, because if if the price is cheaper or not cheaper, they have to be used. It's used in everything from medicine to the food supplies with margarine and all this stuff. I can remember as a little boy. He was a little boy back in 1836, I think it was 1837. We used to go to the market and we would buy margarine, and margarine was white in Indiana, Iowa, and Illinois because they wouldn't allow it to be colored with yellow, but it came with a little colored yellow dye, and you would take the margarine and mix it with the yellow dye to make it look like butter. So you were using soybean oil, but it made it into butter. And well, it was soybean oil, but it made it look like butter. Well, later on, they got all these laws passed, and it was really amazing, how everything changed over. I don't know if you folks know this or not, but the soybean plant was brought to the United States from China by Henry Ford, because Henry Ford wanted to paint cars a color other than black. and he couldn't find a paint base to use because the oil-based paint that they wanted to use just was not good, and lacquer, which is basically crushed up insects, was not able to get in a large quantity. So they found out that the soybean oil made a fabulous base paint, and that was started by Sherwin-Williams Paints in Chicago, Illinois, back in the early 30s, I believe, when the first crops started to come in, and now it's one of the largest crops in the world. So that's just a little 2 cents worth of the old soybean story. But it looks like we are going lower in these grains. They had a chance last week to hold, but with that bearish crop report that came out, it basically, said that it was pretty much, not going to be the case, and we had to, forget what was really happening, with the grains. It doesn't look like they want to do anything as far as, as go lower. Now, whether that affects this next market that we're going to look at, the crude oil market, we'll have to wait and see. Oh, we've got a caller from Tallahassee. Ben, are you there?
I am. How you doing, Larry?
I'm good. What can I do for you, my friend?
Yeah, great segue. I never knew the soybean plant came from China, but it's a perfect segue to my question. The GMO, the genetically modified organism, seems to be really making some traction on social media. I was just wondering, and I heard percents, which really amazed me. Is it true that 90% of soybeans and corn are with GMO seeds?
No, I don't think it's anything. I'm guessing now, but I don't believe so. And the reason why is the farmers that I know, they don't get involved with that kind of thing at all because of the fact that they're basically, well, I'm sure there are some, but the person that we have to answer to that is Rich Anderson. I'm getting a Skype message right now from someone who's very smart that says, yes, they are genetically altered, but I don't know if it's GMO or not, or if it's just some type of a change in the molecular structure without, well, I guess genetic would be molecular structure. So the answer to that could be yes, but, I don't know. I haven't seen any difference in the foods. I mean, I don't think the cat, I don't know. I really don't know. They must be okay because they still use this stuff.
Yeah, I was just curious because you have such great knowledge of the history of where things come from, and I think it came out in what I heard the last few days is that came out by Monsanto in the
Yes.
early to mid '90s, and the news isn't real positive recently, and I just thought, wow, if it really represents 90% of soybeans and corn, that could actually decimate that business if they truly found something that negative. But just curious what your take was.
Well, I don't know if it'll be that negative now because they're going to have to eat something, and if you stop, you're not going to eat corn. Or you're not going to eat soybeans, you're going to be in a little bit of a problem because, most of the corn is used for feed, of course, and then they, recycled into hogs and cattle and feeder cattle and stuff like that. But, really you have to have something to eat. I don't know how bad it is. I remember you talk about genetically altered, but when I was a little boy growing up in Indiana, Terre Haute, Indiana had a Monsanto plant there, and my teacher, my kindergarten teacher was Mrs. Westerman, and her husband was a chemist for Monsanto. And one day, when the new year started, Mrs. Westerman was no longer teaching, and we found out that her husband had found a product called MSG, monosodium glutamate, and he patented it and became a multi-millionaire. And she didn't teach anymore. I didn't know what MSG was for many years, so that's what we're looking at right now.
No, that's interesting. I also heard like sweet corn represents, that we actually eat off the cob, represents an incredibly small amount in percentage of the total corn consumed, and that would be pure raw natural corn. It's where they take the feed corn and then they process it for the oils and such is where the big debate seems to be happening.
That's for sure. It's an Indiana and Illinois law that the first 2 rows of corn belong to the public. You knew that, didn't you?
That's hilarious.
That's what my dad and my grandpa used to tell me. We used to go out and take the corn from the farmers.
It continues to be. I know it continues to be my favorite food in the summertime. That's for sure.
Yeah, we used to take it when I worked on a pipeline before I went to college, and they used to take the corn and just drop the whole thing with the shucks and everything, with the skin still around it. I can't even remember what they call it. The shucks are everything. Yeah, and you just drop it into the creosote that we used to coat the pipes with, and it was extremely hot, and you just pull it out and let it cool on the ground, and then you just cracked it open, and boy, it was just steaming perfect. It was really good. So it was. It's called a corn husk. That's what it is. Yeah, we got some old timers in here that reminded me of that. So.
Yeah, no, I'm with you. In fact. Yeah. It's lunchtime, and you just got me real hungry. So I was just a quick question for you, and I just curious what your take was with your great knowledge of commodities.
We will find that answer next week, and we'll have Rich Anderson on the show for you. Okay?
That'd be outstanding.
Okay, thanks for calling in, man.
Yep.
Okay, we've got another caller from Park City. I guess that's Utah. Peter, are you there?
Yeah, I am, Larry. Hey, I'd love you to take a look at the euro. I did a lot of analysis over the last pretty much 24 hours.
Did you sell it last night at 1:30?
I did, actually. I did, just short of the 0.618. I sure did.
Hit it to the exact tick. It was just truly amazing. It was probably it's one of those times when you have your choice of being lucky and smart, and I happened to pick lucky, so
I got lucky too.
It worked out. Yeah, it worked out pretty good, but the euro still looks bearish to me.
Yeah, very bearish to me. I looked at the 120-minute chart, and it basically went back, retested the break of the downtrend, and I'm looking at like 138 or 135.80, and then 135, and then after that, all hell breaks.
Yeah. Yeah, it really does. Below 135.30, it's not going to have many friends.
Exactly.
Because it has a very strong downtrend on a longer-term cycles. We've talked about that, quite a bit, that they've been going lower in the euro for quite some time. So my guess is it will continue down.
Yeah, I would think. And even on a daily, if you tag the 139.90 down to the 137, I mean, pretty much last night was, if it takes out last night's high, well then fine.
Yeah. And but what was amazing is that Peter, that it stayed there for almost 2.5 hours exactly at 135.50. I was just amazed that it could do it, but it just stayed there for just about 2.5 hours, just bouncing around pip by pip, and it just shows you the liquidity and the technical perfection that euro has as a trading vehicle. It's just absolutely awesome.
Yeah, no, I couldn't agree more. No, I just wanted to get your take on it. No, I appreciate all your help always, and enjoy listening to you. And yeah, I think the euro will euro and a little bit of the euro yen will dictate where this market goes. But it's not looking pretty, and I don't know what it's going to be out of Europe. Is it going to be a true contagion bond issue, which it very well may be.
You want to hear something funny? I use. What is it called? Oh dear, boy, as you get older, boy, my mind. I hope I'm not getting Alzheimer's. What am I thinking of? What's my voice recognition system? I'm looking at my computer and I can't even remember. Anyway, I have a voice recognition system that when I was talking, I was talking about Mario Draghi. Whenever I put Draghi in, it was always giving me druggy, D-R-U-G-I-E. And I said, I wonder if that's a Freudian slip. And then I saw that John Maudlin from Business Insider also did that. So, hey, thanks for calling in, Peter. I appreciate it.
Thanks so much.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to take a look at crude oil here at the last part of the commodity hour here. And we have made a 382 retracement off of the January low. As of today, we've been down for 3 weeks in crude oil, which is one of the larger corrections that we had. We had a 2-week correction in March. We had a 2-week correction in May, and the correction was 3 weeks. And it stopped exactly at the 382 retracement of the low in January at that 101.50 level. That should be a very important spot here in crude oil, and it's very oversold. It's also coming at a 61% retracement of the lows that we made in late April when we were down under $100 a barrel before we had the run up to 107 80, which was the exact 786, by the way, from the high that we made last year at 112 when we made the butterfly pattern in the crude oil. So this crude oil is at the moment of truth right now. It's still a little down on the day, but it's trying to, actually it's turned the corner. It's actually up on the day now. So the bottom might be in here at this 101.40 level in the crude oil today. Because of the fact that it hit some of these really important cycle points that I think will hold for some time. However, on the other side of the coin, if we get, I have corn on my mind, I'd like to buy it, but it looks like it's going lower to me. The main thing that I'd like to see here in the crude oil is to see it hold above this 101 level, because it really should not go below 101 per barrel. If it does that, it violates the 382 retracement, it violates the 61% retracement off the low in May, and it also violates the one from the 50% retracement from the low in March. So all of those come together at this 101 and change level. And that's why it's such an important spot to keep to keep watching for a place for the market to get ready to possibly make a retracement to the upside, because we're very oversold. We're down 3 weeks. We should get a rally in that just because of that particular move. I was asked to take a look at the VIX index one more time because Basil had talked about that before, and Basil is the master of this index. He knows it far better than anybody that I know, but the numbers he was looking at were very close to what I was trying to find. And if you'll give me a second here, if I can walk and chew gum for just 1 second more. Oh, I'm getting close. It's getting close. There we go. Basically we had this big move up that took out the highs from June 16th, and now we've sold off. We're near the lows of the day now. We had a range from 1330 down to 1220. So that's a huge range in this. So if it's going to hold, it's got to hold in this area right here, and then it would close somewhere around the 1270 area in the middle of that range. That would give it a bullish projection to at least 15, and we think that it's going to go to at least 30, and we're only at 1223 right now. But this market is it's very, very very, very active. We're starting to see volatility, folks. It's not a one-way market anymore, and that's what we need. We need players to come in, and we need to see the prices go up and down quite a bit, because that's what makes a ball game. You can't just come in here and see what's happened recently in stocks for, since April. We haven't had more than a 2-day correction. That's an outlier event that hasn't been seen in, I think, 15 years, and we've only seen it maybe a half a dozen times in the last 100 years. So it just doesn't happen that way very often. Most of the time, it's Isaac Newton's. For every action, there's an equal but opposite reaction. What goes up must come down. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.